Welcome to Stock Simplified. Today, we're going to go under the hood of a company we all think we know, Amazon. But let me tell you, the real story is, well, it's far from simple.
You've definitely seen this smile on a box sitting on your doorstep. Of course you have. But the Amazon that delivers your packages, that's just the tiniest tip of the iceberg. The real story of how this company actually makes money is way more complex, and frankly, a lot more interesting. So, to really get what this business is about, we have to look past the online store and figure out who Amazon's real customers are. And this right here is what makes Amazon a true platform. See, it's not just a store selling stuff to us, the consumers. It's a whole ecosystem selling services to everyone. You've got small businesses, you've got developers, content creators, advertisers. Every single one of these is a totally distinct way Amazon makes money. Okay, let's dive into this. Because to really understand the business, it's best to think of it as three totally separate empires that are all generating revenue. And each one operates very, very differently.
So, at a glance, the sales numbers tell a story you'd probably expect, right? North American retail is king, making up 60% of all the money coming in the door. But here's the most important thing you need to understand about Amazon. The biggest slice of the sales pie is not the biggest slice of the profit pie. Not even close.
First up, you have the retail segments. Now, the best way to think about these isn't just as a store, but as a giant digital mall owner. Seriously, Amazon provides the storefront, the payment systems, the warehouses, the delivery trucks for millions of smaller shops, and it takes a cut for all of those services. Then you've got AWS, or Amazon Web Services. This is like a massive digital real estate business. It rents out the literal foundations of the internet, things like computing power, data storage, and other super complex tech tools to pretty much everybody, from tiny little startups to huge global companies. And finally, you have the advertising empire. This is basically the premium shelf space at the grocery store. Sellers pay Amazon to make sure their products show up at the very top when you search for something. It turns the whole website and app into one gigantic digital billboard. So, three different empires. Now let's see how all of this actually translates into the numbers with a quick financial health check. First, let's look at sales. Now we're looking at the trailing 12 months here, which just means we're seeing the full past year of data to smooth out things like holiday shopping spikes. And what we see is really strong growth. This company is still expanding at a massive scale, pulling in over $700 billion. That's huge. And on the surface, the profit picture, it looks even better. Net income has jumped a lot over the past year. But whenever you see a jump this big, you gotta ask yourself, is all of this coming from their normal everyday business, or is there a catch? Well, it turns out, yep, there's a catch. And here it is, straight from their own report. A huge chunk of that profit, about $9.5 billion, came from an investment gain in an AI company called Anthropic. Now look, that's real money, for sure. But it's so important to know that it's a one-time thing. It's not cash that came from their core day-to-day business operations. And this slide right here is where we find the real story. When we look at operating income, so the actual profit from the day-to-day business, the picture just completely flips upside down. The retail empires, which brought in most of the sales, are absolutely dwarfed by AWS. With just 19% of the sales, AWS generated the vast majority of the company's profit. This is the true profit engine of Amazon. But this is where the story gets a really fascinating twist. So, profits are up, but the company's free cash flow has fallen off a cliff. Now think of free cash flow as the actual cold, hard cash the company has left after paying all its bills and investing to maintain itself. Profit on paper is one thing, but this is the real cash in the bank. So, if profits are soaring, where in the world is all the cash going? The answer is kind of hidden in a single, really important line of questioning from their last earnings call. The answer is in this term you hear a lot, CapEx, or capital expenditures. Basically, Amazon is spending an enormous amount of money building physical stuff, mostly gigantic data centers, to power AWS and their massive push into artificial intelligence. And as you can see from this analyst question, Wall Street is getting a little antsy, wondering just how long this spending spree is going to last. So how does the leadership team justify all of this massive spending? Well, let's take a look at their vision for the future. From management's point of view, it is all about AI. They see it as a massive tailwind pushing them forward.
They're pouring cash into these huge projects like Rainier to power AI for their AWS clients. And they're even developing new AI shopping assistants to completely change how you and I buy things. They are betting big on this.
But the major headwind? It's the direct result of that ambition, the cost. The big challenge for the folks in charge is balancing this intense period of spending to build for the future of AI without totally wrecking the financial health of the company today. I mean, it's a real high-wire act. So all of this information, it creates two very different ways to look at the company right now. You've got the optimistic bull case, and you've got the skeptical bear case.
So here's how it all breaks down. The bull case, the optimistic view, is pretty simple. The huge spending on AI pays off, big time. It creates another super powerful growth engine on top of the already dominant AWS and retail businesses. The bear case, on the other hand, is that the spending spree just burns way too much cash for way too long, right at the same time that competition starts to eat away at those amazing profit margins. Ultimately, the goal of this explainer is to give you the foundational knowledge you need to understand all the different moving parts of Amazon's business. That way, you can start your own research from a really solid place. And as always, please remember that this analysis is purely for educational purposes. It is absolutely not financial advice, and you should always do your own deep dive research before making any investment decisions.